So Michael Burry is the big short investor, and he's the one who basically predicted the subprime loan crisis back during 2008 during the housing market crash. And he made a ton of money shorting these subprime loans and ended up making a fortune back during the last housing crash. Since then, he has made many different predictions and just recently said basically, we're already in a recession, or that there will be a recession this year in 2023. It really doesn't matter how you define it or when you say it started, because the effect is going to be the same in the end. He has a very interesting prediction for 2023. So let's discuss that and what might happen if his prediction comes true. He's saying that eventually at some point in 2023, the Fed is going to pivot and start cutting interest rates. And he thinks it's likely that the federal government will come out with another stimulus package. Because by then the economy will be in the toilet and they're going to print more money and go back to QE and try to dig everybody out of this mess. The Fed pivot does sound pretty realistic, but I'm not so sure about the government stimulus packages. And the reason is because the Fed has already come out and said that they plan to get their federal funds rate up near 5% and then hold it there for as long as necessary. Some people will look at that as a Fed pivot, but it's really not a pivot because they basically raise the interest rates. And once they hold them steady, that means interest rates are not going up or going down. It just means that they're going to stay where they're at. And to me, that is not a pivot. It's only a pivot once they start reducing interest rates. But the thing is, they've already come out and said that they're not going to be reducing rates until inflation is under control, however long that is. But here's the scary thing. Michael Burry ends up being correct, and the Fed does start actually lowering rates in 2023. And the government comes out with a stimulus package that's going to make inflation much higher than it is right now, guys. Because a lot of people have basically said inflation has peaked and now it's going down for the last couple of months. And the CPI is slowly coming back and everything's going to be fine. But if this scenario that Michael Burry describes comes to fruition, it's going to do the complete opposite, guys. You think inflation is bad now? Just wait until that nightmare comes true. And I hope it doesn't come true because that would be awful. I mean, just awful. And I'll tell you why it's going to be awful. First of all, it's going to make everything cost even more than it already does. And I am so sick of this egg thing. $7 a dozen eggs. I am just beside myself. So if you think that things are hard to afford now, just wait. And even if there is a government stimulus package, look back at how much you got last time. You know, people got those stimulus checks, even if they came out with another thing like that and did another $6 trillion, which would be completely insane. What did the average person get? Maybe $3,000 or $4,000 total? It's not enough to really turn your life around, that's for sure. And that $3,000 or $4,000 is not going to go very far when inflation reaches records highs. Then the second thing is when it comes to the housing market. Now, if Michael Burry's prediction comes true, then likely what's going to happen is everybody who has been saying that home prices are going to go up will actually be right. Because in an environment where they're lowering interest rates and handing out free money, we already saw what that did to the housing market last time around. It shot things up to record highs. And if they do it again, it will shoot things up to new record highs. But before you go and celebrate and say, well, now would be a great time to buy real estate, then because it will just go up. First of all, this is just a prediction from Michael Burry. There's no evidence that this is going to happen, first of all. And second of all, even if it does happen, you might be able to make a lot of money quickly if you're a flipper. So for people who are in it for the long term are in big trouble. Look at what is happening to the home prices now that all the stimulus is over, right? And let's say they do this again, like his prediction says, and home prices go up another 20% from where they're at now. And the problem with it is that once the stimulus is over, the next time is that home prices will begin to fall on levels that you've never seen before, because prices got to levels we have never seen before. And this stimulus cannot go on forever without completely destroying the country, without completely destroying the values of the US dollar. And that is why I think a scenario like this is highly unlikely to come true. But who knows? You know, Michael Burry is a very smart guy, and he thinks possible. And at the end of the day, maybe all the bigwigs in the government are going to be looking out for their best interest, and they want to help all of their buddies be rich, because we've seen them do that time and time again. But this time, our entire country and the value of our currency is at stake here. So I don't know if they're going to be that foolish or not, but imagine if you are somebody who ends up buying during this next theoretical housing boom. And then once that stimulus is over and home prices go back to what they're really worth, pre-pandemic levels, that would be an unbelievable situation to think about being in. Anybody who bought during that time frame could potentially be financially house poor for a very long and possibly undetermined amount of time, especially if they were looking at trying and selling anytime soon, or buying something and flipping it. So let's talk about housing affordability. So, you know, it's interesting because I've shared with you all that we're looking for a house ourselves. And we are going to be putting our house on the market in the next 2 weeks. And it's really interesting because we're looking around at all these different houses, and I don't think sellers get it. I don't think builders are yet where they should be. We've been, well, let's just say this. We have made an offer on a particular home. It's new construction. And while they're giving some incentives, the incentive is only if you use their particular preferred lender. Well, I got my own lender, but you know, they're offering $17,500. That's a lot of money. You know, it's a great incentive, but why not just lower the price to where it should be? At the end of the day, I don't want to be in a situation where I'm going to be upside down in my home. Now, since I'm a real estate agent, of course, I've done my due diligence. I know the market. I've been doing this a really long time, and we're not going to be upside down in our home. I mean, we're going to have a ton of equity in it. But if I wanted to sell it in 2 years, what does that look like? I probably won't make any money. Someone in my situation possibly could be a little bit upside down because they'd have to maybe pay some commissions to their agent if they needed to sell. So we're only talking about a year or two, right? Then what we're looking at is all the things around us that affect the housing market. I feel like every time I go to the grocery store, I'm broke when I leave there. And I come home and I look at what I've got, and I'm like, okay, is this enough to make dinner and maybe have some leftover for lunch? It's crazy, guys. But the interesting thing is everything revolves around the housing and the real estate market. So I want to say thank you for watching today. I really appreciate you. And if you haven't already, please subscribe and hit me up with any questions that you have. You can leave a comment below, and you can also turn on the notification bell. So thanks for watching, guys, and I'll bring you another update soon. Bye.